Hello, Philip Mazloumian here with PMC Business Consultancy. I've put together a blog called the UAE Economy Report, and in it I take the leading economic indicators for the country, and I give them a little bit of an analysis of what that actually means for business owners and professionals in the economy. And then obviously, hopefully, with this analysis, you can make more informed decisions about how to invest and how to mitigate and diversify yourself against uncertainty and risk in the months to come. This will be a monthly series where I'll look at the data that is updated by the government, and I will continue to do more of these as more data comes through accordingly. So let's jump into it. The first economic indicator is consumer confidence. If you do not know what this term means, there's a link here which will give you more detail about exactly what consumer confidence is. But it's quite self-explanatory. It's how confident consumers are, what is their outlook moving forward. And as you can see here, since the beginning of 2020, there was a sudden and dramatic crash in consumer confidence, and that obviously is in line with the corona pandemic that's infecting and spreading across the globe. Now, what does this mean? That's the most important thing. It means that consumers, households, are generally fearful. They might be worried about their job security, their health, and as a result, they tend to reduce their spending because again, they don't know if that income will be consistent moving forward. So they put their cash aside for a rainy day. For businesses, businesses see the impact in their sales, and as their revenue drops, they take actions to lower their costs, but also looking forward, they're less reluctant or less likely, sorry, to invest in new projects that create jobs and ultimately inject cash into the economy. For example, many large businesses, enterprises that develop new projects, initiatives, they hire numerous smaller subcontractors, typically SMEs, and so their investments are quite a considerable part of the overall economy. So currently right now, as of the month of October, consumer confidence is quite low, reflecting the overall mood. And probably we won't see a change here until a vaccine that is well respected, trusted, and actually is proven to work effectively before that's introduced. I don't see we'll really have too much of an uptick in consumer confidence overall, especially as we're entering the winter season and corona infections seem to be increasing around the world, not just here in the United Arab Emirates. The second economic indicator is something called the CPI, which stands for Consumer Price Index. Again, there's a link here if you'd like to know what that means. But in summary, it's when a government takes a basket of goods and they track their prices over time. And this helps people to identify if prices in the country are going up or down. And what we'll see here throughout 2020 overall, as per the UAE CPI, prices have been coming down and they're now below the mean average historically. And this is in line with what, I mean, myself as a consumer, I can definitely see certain aspects in the economy, products and services have been going down in price as companies are trying to incentivize people to buy. However, this doesn't mean that all elements, all product categories, service categories within an economy will go down. It's just the basket that are included as part of the UAE's CPI. The next economic indicator is food inflation. So when the lockdowns occurred, there was massive disruption globally to food logistics and supply, and as a result, uh, a spike in prices occurred, and a lot of people, obviously, food being a large part of their monthly expenses, were horrified to see food prices go up. However, this is actually a good thing in the short term because if food prices were not to go up, but people knew that there was a calamity ongoing, what you tend to have in that situation is hoarding of food and supplies. But as prices go up to be in line with supply and demand, people are less likely to hoard as a result. So either way, food recently in the month of October, food prices have come down, which is good, but they're still above the average mean as the supply chain, global supply chain for food continues to normalize. We'll probably see those costs come down further. Inflation is next. This is general inflation, so prices overall. And as we're seeing, inflation is in a bit of a, it's not inflation, it's deflation at the moment. Prices are currently below the mean. And so what this means is that prices across the board, not just within the CPI, but across the broader economy have also come down. This is probably the most obvious in terms of prices of houses, apartments, and also rents, which have come down significantly since the lockdowns kicked off in the first quarter of the year. However, there's a caveat here. People initially enjoy the prices coming down, but what goes up must come down. What goes down, in some cases, must go back up, or at least revert back to the mean. And so, with the next economic indicator, we'll see that you should use this time to prepare yourself for probably an increase in inflation and maybe a bit of an overshoot over previous historic highs. Tying in with inflation and my point with regards to how the deflation that we're currently experiencing in the UAE now might turn into inflation soon. The reason that I base this is if by looking at the money supply within the economy, we'll see now that the money supply within the United Arab Emirates is the highest that it's ever been. And this is a common trait across many countries around the world, and especially for countries that have pegged their currency to the US dollar. As the US continues to inject more liquidity into their economy and increases their money supply to maintain the peg between the dollar and the United Arab Emirates dirham, this economy also has to keep their money supply within step, and so they have to print more to keep up with the US dollar. And eventually what will happen when consumer confidence does return to the local economy, to the world as a whole, that money that was being saved and hoarded by people in bank accounts will be slowly returned back into circulation, and velocity of the spend of the money will increase. And then what you tend to see is too much money chasing too few goods and services. And as a result, that sends the wrong signals to business owners and business operators. What do I mean by that? If you are a business operator and you manufacture a particular good or service, and all of a sudden everybody seems to have more money, when people feel richer, they generally tend to increase their spending. And so now, as a business owner, you're seeing your goods and services being sold more easily. Naturally, what you do to keep in line with supply and demand, you have to start increasing your prices accordingly. And effectively, this is the beginning of the inflation. And then over time, maybe you need to hire more staff. Those staff have more job opportunities. So to be competitive, you have to give them raises. And again, now that your operating costs are higher, again, you have to increase your prices, and so on and so forth. And the point comes where the money supply is so great, it's hard for central banks and the governments to rein in all that extra cash that's floating through the system. But either way, long story short, use this time now while there's a deflation in the economy. Use this time to prepare yourself longer term for potential inflation. Maybe it won't come. Can't guarantee it, but there are some simple things you can do. You can protect your purchasing power by converting a portion of your cash capital into gold and silver, precious metals. This is historically a great means to hedge against inflation. Also, you can purchase other assets such as property and stocks and bonds, but you need to analyze those investments independently. But generally, a small allocation of gold and silver in your portfolio is considered a relatively safe, low risk investment to hedge against inflation. The next indicator is total foreign assets. And what we're seeing here in 2020, there's been a sharp decline in those foreign assets. Probably one of the leading reasons being that for the United Arab Emirates, a significant chunk of their government's revenue and foreign reserves come from the sale of oil and international trade. Naturally, trade internationally was halted to a great extent during the lockdowns, but also the oil prices crashed due to worries about global demand. Big sectors like the aviation sector couldn't operate properly, so there was less demand for air fuel. Same with cars, private residences, people couldn't drive their cars or were using their cars less regularly, so the supply of petrol wasn't needed as much, so demand dropped there as well. So as a result, the country's been earning less in dollars, and so this is why we're seeing the decline in their foreign assets. But at the same time, the government has to keep operating and maintaining the activities within the country, and so that requires money. So as their revenue is coming down, their costs are somewhat similar, although they have been taking steps to reduce their costs, and this is a reason why we'll probably see fewer major project investments in the near term until there's some change in their revenue situation. Um, but yeah, moving forward, the government sector is probably going to be more cautious about their spending until they've balanced the books somewhat. Gold reserves next. So this graph represents or shows the amount of gold being purchased by the UAE government, and we'll see really starting towards the mid of 2019, but dramatically accelerating in 2020. The government has really been increasing their allocation of gold. So another reason why the foreign reserves have probably been diluting or going down is because they've been shifting to diversify dollars into gold. Now, what does this mean? Gold, again, is a hedge against uncertainty and risk, one of those things being inflation. So it's clear this is more of an insight into what the government perceives as a bit of a risky period, and hence they're increasing their allocation of gold accordingly. And so I would say this is great advice. And if you're a private individual or a business owner and you have sufficient cash capital, to also probably consider doing the same thing in the short term. Again, don't invest all of your portfolio necessarily, but maybe 5 to 20%, somewhere in there, in the form of precious gold and silver. So with that being said, as a bit of a conclusion, it's clear that the UAE economy is going through a challenging time, but this is the same story for economies all around the world. And by many economic indicators, the UAE is actually faring very well. One of the things that I personally appreciate is how the government actually allowed the recession to take its course. What we're seeing in Western economies is their governments are trying to cushion the blow of the recession brought about by their respective lockdowns. But really, all that's doing in effect is kicking the can down the road. By the UAE economy allowing the market to do what it does best, to allow supply and demand to act naturally, what we see is that, yes, there is a sharp recession, and yes, it does cause a great amount of pain amongst people losing jobs, but over time people find new lines of work. Resources within the economy are allocated to areas where they're most needed, and as a result we tend to have a quicker recovery thereafter. But governments in the West that are injecting huge quantities of money directly into people's bank accounts, funding furlough schemes, all this does is delay the inevitable, because eventually that money has to be paid back. The government cannot just rack up indefinite amounts of debt without risking the credibility of their currency. Anyway, I do believe also as an individual or business owner that within recessions there are opportunities to be found. You just have to keep an open eye, think like a contrarian, do what other people are too scared to do, but also calculate your risk accordingly. Don't invest more than you can afford to lose. Make sure you take the necessary steps to hedge yourself accordingly. Until next month, thank you very much and have a great day. So with that being said, thank you for your time. I hope you've learned something new. Please subscribe, like, and share for more content just like this. Thank you.